It's marching to a different tune where in years past, when it would break these round numbers and then fall back, the Western banks would step on it and it would never come back. It would take forever to come back. Now it comes right back. That goes to show that on weakness, the money who is shedding treasuries to buy gold is stepping in and saying, thank you very much for being stupid and suppressing the paper price on the COMEX and on the LBMA. This is being accumulated at a time when the American public, very little participation at all in physical gold or gold-related equities like mining shares, and yet the price keeps going higher. That speaks to, in my opinion, the tremendous desire by the central banks to accumulate it, because I believe it will be part of a new system.
In his recent interview with Liberty and Finance, Andy Schectman, CEO of Miles Franklin, highlights how BRICS countries gradually move away from U.S. treasuries, shifting their focus toward commodities like gold. China, in particular, has been significantly reducing its U.S. treasury holdings, dropping from $849 billion in April 2023 to $775 billion in April 2024, the lowest since 2009. Other BRICS nations have followed suit, with India, Brazil, and Saudi Arabia cutting their investments in U.S. Treasury bonds. This trend reflects a broader strategy among BRICS members exploring a gold-backed settlement currency to facilitate trade while preserving their national currencies and sovereignty. This shift is a clear challenge to Western financial dominance, especially as BRICS countries control a substantial portion of global commodity production and refinement. Initiatives like China's Belt and Road and the Shanghai Cooperation Organization, which collectively represent 75% of the global population and half of the world's GDP, further bolster their influence. Gold prices have surged amid a shifting global landscape, driven by central banks rapidly increasing their gold reserves to shield against financial sanctions and geopolitical instability. In the past 2 years, central banks have acquired over 2,000 tons of gold, with 81% planning to boost reserves even further, signaling a clear move toward de-dollarization and the potential for gold to play a central role in a reimagined global financial system. This rise in gold prices also reflects speculation around the possibility of a gold-backed currency within the BRICS bloc, raising expectations of growing demand for gold as these nations seek to secure their positions in the evolving financial order. Despite efforts by Western financial systems to suppress gold prices, BRICS countries, especially China, are actively amassing gold and silver as part of a broader strategy to strengthen economic resilience and protect themselves from external pressures. We will present clips from Andy Schectman's interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell so you never miss any of our videos. We appreciate the support and hope you enjoy the video.
I'd first start by slowly selling treasuries and reinvesting them in commodities. Isn't that what's happening right now when you look at the BRICS countries? They're shedding treasuries at a massive rate. China at one point had close to 3 trillion, and now they're down to 700 billion. They're slowly exiting the treasuries. They're slowly exiting the US-based investments in that respect. And you're seeing a group of countries in the BRICS that are 59 countries more have formally applied. There's 10 there already. I mean, and now they're discussing, as we talked about before, the new unit gold-backed settlement currency, which is not a common currency for the BRICS. It's a common settlement currency where every country maintains their own autonomy, their own CBDC. You would do it once you had critical mass, once you had enough countries to, I mean, as it is, just the countries in the BRICS right now have a more human population, GDP. They have 2 of the 3 largest nuclear arsenals and a much larger military presence on top of they produce and accumulate and refine almost all of the world's commodities. So you add 59 more countries onto this, and now you're talking 8 out of 10 people, a human population. You throw in the Belt Road Initiative and the Shanghai Cooperation Organization. Why do you think Iran has, or China and Russia have said they're going to back Iran in whatever happens, and they have the right to defend their own sovereignty, et cetera, et cetera? Well, Iran is part of the Shanghai Cooperation Organization. It's the largest regional military organization on the planet, military and financial. They're in the BRICS. They have chosen sides. And so when you talk about massive amounts of human population, add another 59 countries or more, and add the Belt Road, the largest infrastructure project in human history that's already 75% of human population, 50% of global GDP. The US isn't on it, nor any of the Western countries. So you put all of these entities together in terms of commodities, military, population, GDP, everything. And I would say it represents a very formidable foe. And that's when you do it. You don't do it until you don't pick a fight with the biggest bully in the schoolyard until you got the whole sixth grade standing behind you, so to speak. It's marching to a different tune, where in years past, when it would break these round numbers and then fall back, the Western banks would step on it and it would never come back. It would take forever to come back. Now it comes right back. That goes to show that on weakness, the money who is shedding treasuries to buy gold is stepping in and saying, thank you very much for being stupid and suppressing the paper price on the COMEX and on the LBMA by naked shorting it. And so the fact that it continues, I mean, you look at something like Bitcoin, and I'm not a Bitcoin hater. I'm not. I want people to understand that. I'm not. In fact, I own just over one Bitcoin, but I am not a Bitcoin hater. But I'm not a Bitcoin believer either, the way that a lot of people are. But Bitcoin, which is supposed to be digital gold, can fall by 30%. Gold's never done that in a day or two or three or four. I think the volatility of other assets are that sometimes people think are replacements to gold, speak otherwise. When you look at gold's strength, it just goes to show that the biggest money in the world, the central banks, who just came out that the first 2 quarters of this year were the most gold ever bought by central banks in the first 2 quarters of any year, surpassing last year, which was the highest ever. And so I guess what I'm simply saying is that this is being accumulated at a time when the American public has very little participation at all in physical gold or gold-related equities like mining shares, and yet the price keeps going higher. That speaks to, in my opinion, the tremendous desire by the central banks to accumulate it, because I believe it will be part of a new system.
Bullion dealer analyst Andy points out that Western media has long been hesitant to portray gold in a consistently positive light. They often highlight its benefits, but quickly undermine them with negative narratives. For example, recent reports claimed that China had stopped buying gold, forecasting a drop in gold prices. This claim was proven false, as UK export data confirmed that gold shipments to China continued as usual. In a recent Forbes article, Steve Forbes noted that it might be surprising, but the world is beginning to lurch toward a gold-based monetary system. He observed that this negativity is unfounded, despite the widespread disdain among economists and financial officials for the historical gold standard. Forbes argued that the gold standard supported the dollar for 180 years, allowing the US to experience the greatest long-term economic growth without enduring significant price inflation. Andy acknowledges that while the gold standard has faced criticism from economists and financial officials, it was historically effective in providing stability and preventing inflation. The US enjoyed remarkable economic growth under this system until it was abandoned in the 1970s. Central banks are acquiring gold at unprecedented levels today, driven by concerns about the dollar's future and the decline in US global dominance.
For the last forever, I've never seen a Western news service say anything about gold that wasn't, yeah, but it's negative. So they'd say one thing that's positive, but yeah, but kind of like talking about gold and saying how China stopped buying gold for 2 months and, well, the price is going to fall. Now, first of all, that wasn't true. The export numbers out of the UK show that wasn't true, or the commercial banks. The way that the gold is shipped shows that they've been buying it. They haven't stopped. And I said that right away. But there's always something that they talk about in a story. Now, before I read this, Judy Shelton, if Trump were to win, she'd be the Fed chair, or she'd be who he would nominate. And she's a advocate of the gold standard. She's also talked about buying 30-year treasuries and linking them to gold so that they are redeemable in gold, so that people would actually buy longer duration treasuries. But of course, the gold price would have to be a whole lot higher. But let me read you something that just came out of Forbes. The article it says, it's hard to believe, but the world is beginning to lurch toward a gold-based monetary system. This despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. We never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. The signs of change are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, Russia, and a number of other nations such as Poland. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And here's the part about Judy Shelton. And so India last year began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It's Bad, and How to Fix It, observes these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed every single stock and bond market worldwide.
Wow.
And so there's more, I'll skip it. But the bottom line is that, you know, I think that it benefits the system, it benefits the governments, it benefits everyone, but it would create greater inflation. And I don't know exactly who, if anyone, would really, opposite of some sort of like Operation Sandman, where everyone dumps dollars and everyone in the world has had to stockpile dollars for 50 years. And if those dollars all hit our shores at the same time, along with the dumping of treasuries, interest rates would spike to triple digits. Well, maybe not that high, but high double digits. And in that event, because you can't have high double digit inflation without interest rates to compensate, or your currency dies. So at that level, stocks, bonds, real estate, the banks, and the insurance companies all vaporized, just like that. And there's your reset. And maybe that's what Klaus Schwab was talking about. I don't know. I think a gold revaluation would be a much gentler way of resetting the system and issuing a central bank digital currency tied to gold. And I find it interesting that both Trump and Harris have embraced cryptocurrency all of a sudden, which leads me to believe almost like they are listening to the Federal Reserve, who is hinting we will be transitioning to a central bank digital currency, some form of a cryptocurrency, whether it be, it won't be open source and decentralized, but it will warm people up to a digital currency.
The potential consequences of a mass sell-off of US dollars and treasuries could be disastrous, with soaring interest rates and a drastic financial upheaval. Yet, a carefully managed gold revaluation might provide a more stable path forward. This approach could facilitate a gradual shift to a new monetary framework, possibly incorporating central bank digital currencies linked to gold, offering a more controlled transition while mitigating the risks of a chaotic reset. Please share your thoughts on Andy's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.